Welcome to BearsToBulls.com. It is Sunday, July 10th, and we are going to be taking a look at gold and oil futures. Last week, as you can tell from the chart, gold came up just past a half a deviation to the upside and pulled back a little bit. So it looks like you could have gotten some strikes up there at the standard deviation level, depending on the price level. If we take a look over here at gold, gold looks like, oil, I apologize. Looks like it was on a downtrend. We came down, touched the deviation, came up, and then we blew past the deviation level to finish out the week. So you could have gotten a nice trade right there on the bounce. And you probably could have gotten a trade here back to the downside. So if we're taking a look at the week ahead, I think gold's gonna relax a little bit. It's gonna find its groove here. I think it's done moving substantially from the Brexit vote. But gold, I think, is always a good investment to have in any portfolio. It doesn't matter personally what you're investing in. I think gold's just a nice base to have. Keeps its value for the most part. I don't think it drastically loses value or drastically gains value, but it's something that stays relatively valuable, especially when the markets start to go down. People run to gold as a safe haven because that's what most people know. They know gold is a valuable asset. It's rare in the aspect that there's a finite amount, so the prices will be sensitive to people gobbling up physical gold. So I think gold's just good to have, especially when the markets are down. But if the markets are roaring, I have no problem with there being no gold because no one's going to be in gold. But then again, you can buy gold on the cheap and then wait for the downturn in the market. So this week ahead, I think it's going to relax. I don't expect a whole lot of volatility in the gold market. I don't expect a lot of price movement. But then again, gold is unpredictable. So as for trades, I would just wait for the half deviation, full deviation line the week ahead. Just kind of play off those levels. If you see high volume moves, you can play off that, or just momentum. Find some swing points, trade off those. When I trade on the Nadex exchange, I look for in the money strikes. So if we take a look here, the market came up to 1377 and a half. I look for strikes as high as I can get because I know the markets odds are the markets are going to turn at the one deviation level if it would have kept going. So I'm looking for strikes that are as high as can be in the money, and then I'll sell those ones. I pay attention to price on the strikes, but when I trade, I prefer like a 2-to-1 risk ratio. So whatever the price is. So if I sell a contract at $30, in that instance, I'd be looking to buy back if it started to move against me at around 60, 65, because that's a 1-to-1. But if you look at like a $20 contract or a $22 contract, I'm willing to risk a little bit more because we're already in the money at 20. So if it goes against me a little bit, if it goes against me 1-to-1, we're still in the money by a decent amount. So I usually let those ones go 2-to-1. But to each their own. Your investment, your trading style is completely different than mine, as it should be. You should never trade exactly like how someone else trades because we all trade differently. We all trade our own way, and we all invest in our own way. It's a very unique job. It's a very unique way to make money in financial markets because not everyone does it the exact same way. If we hop on over here to oil, like I said previously, oil came off the one deviation level. We could have played a bounce there. If we're looking ahead, if we pull out to the dailies real quick, take a look, see, it looks like we're starting to go into a downtrend. We got the high, we got lows, we got lower high, support low, lower high, and then it finally broke. So I think we're going back to the downside. 43.40 looks like probably the next one because this is where it began the uptrend. So I would be looking around the 30. We'll call it 43 and a half level for support. I think it has a little bit of room to run. If we look in here, it comes down. Still got a little bit more to go. So I would think next week oil is going to be on the downside. Later today, though, I'll plot all my charts or the standard deviation lines and wait. And we'll see how it goes. I hope this helped you guys out. If you have any questions, feel free to email us at bearstobulls@yahoo.com. Please like and subscribe to our channel. Be sure to follow us on Twitter. We go by @THE Bears to Bulls. You can follow us there. We post up new articles, we post up trades, we post up any information regarding the site. And if you want to head over to the site, there's a contact box at the bottom of the homepage. You just fill in your name, email, and a message, and we'll get back to you that way. So if you guys have any questions, let us know, and we'll talk to you soon.